points. Have gotten foot loose. They aren't doing it on Wall Street at the moment. Kind of in a holding pattern for the last 24 hours, I expect. Let's find out what's going on with you, your money, your IRA, and your 401k. Wall Street happens every day. And we got Phillip Statler on the line from Statler Financial Service to explain it all in shirt sleeve English. Phillip, good morning. How are you?
I'm doing well today. I'm not so sure about short sleeve English, but we sure try to explain some of it anyway.
I kind of got led into that because we're going to get a little technical with a wave theory that folks hadn't really heard a lot about and nobody really wants to understand in a minute. But setting the table from yesterday, we've got kind of a whole steady day yesterday. It was green ink, but nothing really exciting. Dow up 8, NASDAQ up 14, Standard & Poor's up 4. And while it may be going the other way this morning, we sure aren't moving much. And I'm suspecting a big chunk of that is wondering what the Federal Reserve is going to say because we get minutes this afternoon.
Yeah, we do. We get the minutes coming out this afternoon. And, I guess I didn't pay much attention to the weather today, but I guess there's a big storm coming through. So a lot of Washington is closed down. But the Fed minutes are going to come out anyway, Dave. It doesn't matter how bad the weather is.
It's kind of almost automatic. Don't they do that up in New York anyway?
I'm not sure where they actually come out at, but I would think that's where Wall Street is. You would think that's where a lot of the financial data would come out.
I was going to say the big weight in the Fed is at the New York Fed, even though their offices may be in Washington. So I'm not sure of that. Not really a lot other than that that's earth-shaking to talk about because, like I said, it looks like everything's on hold. And everybody wonders which direction we're going to go. Before we went on the air, you and I were talking about, theories and what's going to drive the market and what's going to happen. I've always been a fan of the price-earnings ratio on the indexes to get an idea overall how the market is priced and whether or not there's headroom to go. Those rules of thumb have gone out the window. You got an analyst that you've been reading about that talks about the Elliott wave theory being an indication as to where we're going. What the Sam Hill is that?
Well, it's a theory that the chart guys use. It's a technical. All the technical guys, those are the guys that chart different points on the graph, and they follow that. And the Elliott wave theory basically is there's certain waves. Waves are ups and downs in the marketplace over time, and so we talked yesterday about one analyst thinking that we're going to see a pullback to about the 2550 mark on the S&P 500. Well, this analyst feels like he expects a drop in the S&P 500 down to 2250, 2335 range.
Whoa.
Yeah. So a big drop. And what caught my eye in this headline was, and it's an opinion piece, obviously, but the headline was a drop in U.S. stocks may be fast and furious, according to the Elliott wave theory. And so I started reading the article just to kind of figure out what the waves were and where we were in that process. So basically he's saying that he thinks that according to his charts that we could head up over 2,800 for just a little bit, but then when it drops, it's going to drop fast down to that 2250, 2335 number. So, it's all theories, it's all charts, and they base it on things that have happened in the past. That's what develops these theories. But you and I both know, Dave, that theories don't always work. They're just a indication that give us an idea, hey, maybe we need to be a little bit more cautious here. But very rarely do we see them actually, go through that process. And you never know until you look backwards and say, oh, yeah, that was an Elliott wave or that was this, So I don't say take it with a grain of salt, but add that to the other things that you know or learn about and take that all into account.
Exactly. I was going to say, add it like a data point because doggone it, all the rules just don't seem to apply. I've always said, I've watched the overall price earnings ratio on the indexes as being my bellwether over the time, and then I kind of massage it with my own personal theory of market rhythms. And I was all ready to run, jump, and bail about 10% below the top of things because all of my theories about price earnings ratios went out the window on the last run-up. And now we're looking at, we were all concerned about a 20% bear market. We experienced that on one index for about, 3 hours and bounced right off it. All of those rules and all that historic behavior of the market just doesn't work the way it used to, does it?
Well, it doesn't seem to be working the way it used to anyway. And it's always a hindsight deal, right? You always have to look backwards and determine, okay, where was I? Was I in a correction? Was I in a bear market? And what were the indicators before that? And then they try to take that exact same thing and apply it going forward. And just we're never in the exact same marketplace that we were when those events happened.
Exactly. The variables change every doggone time. End of earnings season going on, and we got a couple of household names that reported after the close yesterday and before the opening this morning. I'll bet you've got some names we recognize.
I do. I got a few that I think people out there will recognize for sure. First one's CVS, the drugstore chain. They did well on the earnings per share. They beat by about 9 cents a share. They did miss on their revenue, and they're really getting hurt this morning because they came in and adjusted their full year outlook for 2019, and it's not near what the analysts thought it should be. And so, they're trading down almost 9% this morning before the market opens up.
That explains the big thing. I was looking at the stock tanking pre-market, and I was going to say, okay, it was a tiny revenue miss, and they actually won on earnings per share. I was trying to figure out why they were tanking so bad. It was guidance, right?
It's guidance, and it's a significant difference in the gross revenue numbers for guidance.
Okay, that at least that adds up and makes some sense for why I'm seeing such a big red number on CVS this morning. Other
Yeah,
major issues.
I'm trying to think. We're talking about like they were talking about like $1 billion difference in what they
Whoa,
expect and what they were looking for.
that's almost enough to attract a politician's attention, even.
Yeah, really. So then we
Really,
have Garmin, right? Garmin, the GPS people that make those devices, and they had a really good quarter. They beat by 22 cents a share. Revenue came in above what Wall Street had really forecasted. They're seeing a lot of strength, Dave, in the fitness and outdoor product lines that they run, and so
Hmm.
so they're taking what CVS has given up right now. They're up about a little over 7% this morning.
They're toward the top of my big winners list this morning. That makes sense. They do
Well,
make a cool bunch of products.
no, they do, and actually, they open up this morning. It'll be a new 52-week high for them.
Cool. One of the ones that caught my eye was Gannett, the people that publish USA Today. And my Lord, was that a miss on Gannett's side of the fence, huh?
Well, the earnings per share wasn't a bad miss. They only missed by about 2 cents a share,
Mm-hmm.
um, but they missed on revenue, and so that's hurting them. They're still making improvements. For those that don't know, Gannett's the publisher of USA Today, and so they're still trying to move to the digital platforms, and they're trying to get to the point where half of their ad revenue is coming from the digital world. They're not there yet, and so they're not really getting beat up too bad this morning, Dave. They're actually up 0.8% right now. Um,
What?
yeah, and they're really pretty close to their 52-week high.
Good heavens, because I was looking at it and saying they're kind of making that 50-50 ratio in the wrong direction with a $97 million decrease in revenue.
Well, yeah, I mean, big
Got to get to
miss. A
50-50.
big miss
Don't
for
bring one down to meet the other, bring the other up, right?
exactly. But they're actually trading up 0.8% this morning.
Huh. Well, logic
Uh,
sometimes escapes me, huh?
Sometimes it just doesn't work, does it?
No, it doesn't. Other issues.
So I got, I think, two more here that people will at least know the product line. Wolverine Worldwide, they're the makers of shoes like Sperry, Hush Puppy, Saucony tennis shoe. They came in about 3 cents above estimates. However, their revenue was below the forecast, and another case where they're adjusting their 2019 forecast for earnings, and they're talking about it falling below the current consensus, and so they're down a little over 3.8% this morning before they open up. And then lastly, I've got Herbalife, the Well, they make a lot of different things, but
Supplement
yeah,
organizations,
supplemental things. So they came in 2 cents above estimates, and I don't know if people remember, but not too long ago they were in this brawl with a lot of outside investors trying to really kind of take that company private. But they seem to be pulling out of it and doing well. Revenue was slightly below the consensus estimates. Retail sales were good though, and they're up about, well, they're getting close to 2% this morning before the market opens.
Cool. I vaguely do remember that buyout battle going a few years ago, and it just completely had slipped out of my brain. That kind of actually good news to see them still as a publicly traded company and going up. I'd completely forgotten that story.
Yeah. And then, housing is mortgage applications went up 3.6% last week. I read that in a headline. And that leads me to Lending Club. Lending Club,
Yes.
they're the online lenders, mortgage folks. They did beat by 2 cents. By a penny a share. But their revenue was slightly below forecast. And again, they have reduced their full year forecast for 2019. And, they're a small company. They're trading down 7.2%. It closed yesterday at $3.61. So it's one of those, under $5 stocks right there.
And they're not having a good quarter to start out with, at least as far as their projections, right?
Exactly.
Understood. So setting the table again yesterday was almost flat. Dow up 8, NASDAQ up 14, S&P up 4. Kind of a hold steady day, and it kind of looks like we're heading in that direction this morning as well. Phillip, 40 minutes before we open up, where are we going today?
Yeah, it's pretty flat this morning. It's oscillated between red and green. We're red on a couple indexes. The Dow's down 23 points. That's less than 0.1%. Same with S&P 500 is down less than $2, which is less than 0.1%. NASDAQ's up 3, which is less than 0.05%. Gold and silver both trading up just a little bit. Crude oil is trading down. We're getting down below that 56. I'm liking that. It's 55.75 a barrel right now.
Just a little bit better than yesterday, anyway. Overseas, Asia had an up day, and that means it's been taking Europe up as they start their day going this morning as well. I got green ink across both ponds. Phillip, I need some advice to stabilize my retirement. We're scaring ourselves here. How do I find you on the phone?
Hey, Dave, give us a call at 382-0037. Let's get you in for an x-ray report. Follow us online at statlerfinancial.com, and then follow us on our Facebook page, Statler Financial Services. Hey, we take what we do every morning and we repost it up there on Facebook. So if you miss us one day, catch us on Facebook, like our page there. And then every weekend, join us for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday morning on News Talk 730 a.m.
All righty. Back here again tomorrow morning and on the interweb after we're done here on Light FM. Fair enough?
Sounds good, man. Hey, I will talk to you tomorrow. You have a great day, Dave.